Alright, good morning, good evening, good afternoon. I just want to get this analysis out the way and talk about the trade I took in ES and sort of just touch up upon a post review. This is a midweek review, and I'm going to be referencing the live stream from Sunday. So, around that time when I had posted that, or even created that, it was when the markets were open, so post 6 p.m. And I mentioned that my bias for specifically ES, I didn't speak too much about NQ, but ES was at 59.50. And with the benefit of hindsight now, if you go into your chart, or if you're in my Discord, that was booked at Tuesday, 7:21 p.m. So right now, just so that there's no confusion going forward, it is Wednesday, 6:14, which you can see on the bottom right, Central Standard Time. So let's get started. So today's focus will be on my first trade of the week, which was a loss, and how I'm going to be walking forward after this, and also a review of the trade. So the screen that you see right now is really all you need. And then obviously you'll need Sunday's live stream. So that was a little long, and I just want to add that there was about 30 to 40 minutes where it was just a still screen. Nothing happens during that. It was just me being still, the screen still, no movement, no talking, nothing. So there's no significance behind that. So the stream was about 2 hours, 15 minutes. And it should have really been an hour and 30 minutes. So that was my goal. That's going to be my goal going forward, is to get it done in 90 minutes to 2 hours, honestly. So it's important to take rocks out of your shoes and allow time to do its thing. The more you allow it to eat at the more likely it is to become a deep-rooted problem in the future. So you want to build healthy habits. And what I mean by that is, the reason I'm recapping the loss as my first sort of trade review is because I want to set it in stone of how I expect and hold myself to the expectation on how to treat losses. And so I'm really just, I guess I don't want to say proud, because proud is not what I'm feeling, but I'm just happy. It puts a smile on my face. It reassures me that despite taking a loss and being right, I didn't really feel anything that like made me impulsive. I didn't do anything that I regretted after, and I'm very, 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 very confident that I had the skills to recover this. So that's the most important thing from this, that just because I took a loss, I didn't freak out. I didn't I didn't feel regret. I was just thinking about, okay, I'm going to talk about this on YouTube, and then I kind of, past few days, it was about a day or two, so I kind of just thought about what I want to get out on YouTube. And while today is not going to be a super in-depth trade review, it's just kind of getting this content out there. I have to be somewhere today in about 30 minutes, so I'm going to go through this as fast as I can. So, like I said, build healthy habits, and you have to take those rocks out your shoe, and I did that by just allowing time to really dissipate the problem, if that is a saying, or if that makes sense. But I didn't take any trades after the loss on the same day. I didn't take any trades today, being Wednesday, just because even though I didn't feel anything, I really, really want to build it in concrete. Like, I want this to be set forever. I don't want it to be a problem in the future ever, where I take a loss and I feel any impulsiveness, which I'm sure will happen one day, but I want to have a journal to refer back to, and I want to have a track record that I can say, hey, 100% of the times, 99% of the times, I took a loss and left it alone and allowed it to, disappear, or just be forgotten about almost. Maybe not forgotten, but just for it to settle. It's worked out better than going back in there and impulsively pushing as a revenge trade. So revenge trading, not good. So, but diving into the technicals, and before we're even talking about the chart presented on the screen, I'm going to be referring to Sunday's live stream. So, as outlined on Sunday's live, my targets for ES was at 59.50. Reason being, and this is all on the live stream, so this is just a short little summary that I wrote down. This is all scripted. So the reason being for that was because the dollar was likely to retrace lower into the daily fair value gap, which I mentioned on the live. So there should be a label for that. It should be the daily fair value gap, November something, and it's anchored from the volume imbalance to which is the low of the fair value gap, and the low of that daily candle, which is the high of the fair value gap. So that's kind of what I was looking at, and I had expected it, I had anticipated it. It was most probable for me to expect a retracement down into that. Not bearish entirely for the week, but just short-term bearish. The dollar has been strong, so I wasn't going to fight that. And it had felt like about time where, the ES was going to retrace. It needed to, in my opinion, attack some sort of sell side. So that's kind of what my roadmap was, or my thought process into the trade. So the action of dollar trading lower and creating those down close candles provided me the framework to go long in ES. So as long as the dollar trades lower to a deep discount, this allows ES to run up and trade to those buy stops, which in my analysis I mentioned that I'm still bullish dollar. The only thing that changed that, which was once again mentioned on the live stream, is a failure to remain above previous week low at 104.934. So fast forward present moment, and we see exactly that, meaning we respected that previous week low. We did not go down to it. We held the fair value gap, and we actually, more importantly, rather than holding it, we went down to it. So that provided the risk on framework that I was looking for. So I'm very happy with this result and how accurate the analysis was. Despite one losing trade, this does not change anything for me, and I'm very excited actually to see how I practice the ability to mitigate the drawdown in a real environment. So what I mean by real environment is real emotions, real time, real markets. I can't go back in in a market replay, and I can't, dilly-dally around. This is a eval account, so yeah, still real though. Daily analysis aside though, so I want to quickly go over the lower time frame and why I entered the trade, what steps I could have taken next, and how I feel currently about this loss. So basically at the moment when I take the trade, my intention was to capture a move in London that drew higher. So from 1 to 5 a.m., that's your London session. That's my London session. You can use 2 to 5. I prefer 1 just because that really stuck with me. So, what was I saying? Reason for that was because I was really bullish. Now, I had trusted in my draw also, and once again, with the benefit of hindsight, that draw was correct. Actually, you can see right here that we're trading right about there right now, but that doesn't matter. We're not looking at that. So eventually the draw was hit, yes, but my London idea basically was that when we're bullish, London can typically create the low of day. Whether we did create the low of day or not, I still like this pool of liquidity as like a run up from here, from this swing low. I like the new week opening gap. I like how we sort of created this balanced price range, which turned out to not be as much of a balanced price range. I'm not sure. This is something I'd have to study in my journal, go back into notes and see like what is the protocol, what is the procedure. It could, be out. It could also be viewed as a breaker, but I'm not really trying to confuse myself here. I'm just taking what I know and applying it, and then looking back at this a week or two later and learning from it. So, like I said, I wanted to see a London low, at least by New York. So it didn't have to be the low of the day or the low of the week or anything. It just had to be for the next couple hours. It had to protect that low is what I like to think of it as. And that would have to had been like a safe point or an anchor point. So getting more technical, I utilized this fair value gap, SIBI, as an entry model, setting my stop 5 handles below and limits at 59, 29, 50, reaching for those relative equal highs. So I actually kind of forgot to take a screenshot of my chart at the moment, but the problem is with eval accounts is that after 5 p.m. the trade arrow executions disappear. I didn't have time to take the screenshot, but on the bright side I do have the recording, so I would be open to compressing that down and then posting it in like a 2-minute video. I do have the recording of the trade, not from the direct beginning, because there was something going on with my OBS, and I also switched from Streamlabs to OBS, so it's kind of confusing. But yeah, I utilized this fair value gap, and I'll show you on TradeZella, as an entry model, setting my stop 5 handles below, entry and limits at 59, 29, 50, reaching for these relative equal highs. So my multiplier was basically, my multiplier was here, and my model entry, my entry criteria was here. So, obviously I can always just go lower and say I could have used this, I could have used this, but what I use is what I use, and I have to work with that. At the moment, because there's no recording, there's no proof, but I was trying to reach for this. I had my limit set here, and the truth is I made a mistake by chasing price. I got filled up here. So even though I was using this, I set my limit entry higher, and then I got filled right here around 352, and then you can see that we immediately trade lower, and then I would have gotten a better fill right here. But that's okay, because that wouldn't have changed the outcome. My stop would have still been 5 handles, and my targets would have still been here. So really, I'm not upset about this at all. Like, it could bother me less. But yeah. So market immediately drops, which is not what we want to see. But on the same hand, it's a necessity. So market efficiency paradigm suggests that any market that is going to trade higher is going to trade lower first. Any market that's going to trade lower is going to trade higher first. So I've been very open to allowing trades to just do its thing, not be emotionally influenced. So it eventually starts staggering back and forth, which, once again, I had been open to allow. But the return to this fair value gap would have negated the idea for me, and could have possibly been the start of a holding pattern or consolidation. And so you could have mitigated risk. I could have mitigated risk below here, but I'll talk more about this in a second. So if I had my idea of this low being the next sort of measurement of whether the trade is going to pan out or not, why did I not move my stop up here? Well, because my model, my back testing, and just me as a person, I'd prefer to see this high taken out, which you can see we did not. So the high of this candle is 59.20, and the high of that candle is 59.20. So had we seen that expansion above here, I would have moved my stop below here. That would have been a partial. Either you could have taken a partial had you been in more contracts, or you could have just moved your stop here. So it didn't take out that high, and anyways, At some point in this trade, around like 4:08, 4:10, I want to say, I walked away, and I went to bed. So that was my intention. So I'm not regretful that, oh, I took a trade and I walked away. I have a short attention span. I couldn't handle it. I needed to walk away. I took this trade knowing exactly what I wanted to do, and I executed, and I couldn't be any happier, really. I mean, it's beautiful to see how you can be wrong and sort of still be right, but it's also beautiful how the growth of being wrong has just continued to become more of a beauty in itself. So, like I said, at some time during this trade, I walk away from my desk and allow the trade to do its thing. But post 4:10 a.m., which is a macro, 3:50 to 4:10 a.m., so study that, the market attempts to run higher one more time, failing to do so, but a nice opportunity to run down equity or scale out. But even with that being said, the market still failed to run above that high, never providing the opportunity, and then quickly reaching my stop, where I can be grateful that it did so, because the low I had intended to hold safe during London was ran later and much more than I had imagined or I had thought. So imagine having no stop. Not fun. You can see that this was the low of London right here at 344. I like this signature, but it's not a panacea, meaning it's not a be-all end-all. So it's not like if you see this, it's going to be a large expansion range day. And old me would have seen this and sort of doubted it. But it's so amazing with like journaling, with logging, that these things don't matter. They're just rocks in your shoes, literally. Like, the trade still ran eventually to where I thought it was, and all it did was just trade to a deeper discount. And even like the cherry on top is just that it ran to 59.50. First, it ran to those relative equal highs, which was the trade target. It also ran to my first target for the week, which was 59.50. And then it immediately reversed, which is what I had hoped to see. Now, in the Discord, I talked about it running to 59.63, I think it was. And the reason for that, if you go to your chart and go to the previous week's trading, I can't remember the exact date, but it was Thursday's new day opening gap. So that was resting around 59.63. I had wanted to see it just sort of trade up into there, but it failed to do so. And that's just more, I guess, confluence behind, okay, the market is weak, because we expected it to trade to 59.50 and it traded there, and then we expected it to reverse. And I just wanted to, what I like to think of it as is, I look at the next PD array or new week opening gap or new day opening gap and use it as measurement. So if it goes up in there, if it looks like it can go up in there, then, you know, I'm not going to go short. But if I'm sort of looking at that level and I'm already short, or not short, if I'm already bearish, then I have much more trust in that idea, or that idea. So I think that is it. That's all I have on my paper. So let's talk about the TradeZella right here. So this is what it looks like. This is TradeZella. And full screen, I don't really care if you see those tabs. But $253 loss and 10 cents, and that's including commissions. So we were long. I'm just going to go over this. It was one contract, perfect. Always love that. Nothing wrong with that. So profit target, like I said, 59.29.50 up here. And TradeZella, please fix this. Over here you see it doesn't move on a quarter point basis. And then the stop loss, 59.11.50. So the initial target would have netted me $650. And then the risk, which is always the same, $250. So planned R multiple 2.6, so 2.5, 2.5 R. Not too important to me. That's not really how I look at my trades, but TradeZella does offer that, so that's always nice. You don't have to calculate it on your own. It just provides it. So, and then the realized was 1.01, so basically 1R, which is meaning that what I had intended for this trade to stop me out at, it did so, and I couldn't be any happier with that. Just because I always like to think with the mindset that anything could happen and I could absolutely be destroyed and my stop couldn't register. And it's possible, I believe so. So I'm always grateful for a 1R loss. Entry time right here, 3:52, and at the 34th second. And then the exit time just about 22 minutes later, 4:16:23. This is a tag feature. So for my setups, I like to usually use what I used for the trade. I don't know why this is here. That I think I misclicked. But IFFVG, so inversion fair value gap, is what I used, like I said. That was the premise behind the idea. Just because I didn't get filled there does not mean that that changes anything. So that was still the premise behind the entry. Mistakes, like I said, I chased, and I could kind of have been filled at that fair value gap right here, but it wouldn't have changed anything. It would have just moved my stop 5 handles lower. It wouldn't have made the trade a winner. It wouldn't have done anything. So not mad, but I do want to acknowledge this. I'm not beating myself up over it. I'm just acknowledging it so that when I'm looking at a large set of data, I'm able to recognize this mistake and hopefully learn from it. The news is something I always tag. Whatever the news is for that day, I'll always tag it. Session, London, and then targets, relative equal highs. That was really the trade target, not like the daily targeting or weekly targeting. It was just a trade target. This is how I use my templates for TradeZella. So this is like made by me, provided by TradeZella. This notepad, and I have the date. I have the economic calendar. I can go to Tuesday, and then I can see building permits and G20 meetings. Not really super important to the trade because we were trading London, but it's always nice to have that. Now these I have not filled in yet, but this is something I do. So my initial trade dollar index bias, I'll just basically remove this. And so, you know, I'm kind of still working around with this, but it would have been bearish. So that was the trade idea, but my weekly bias was bullish. So, you know, you have to add like another line. So I would have to do something like copy paste this, put a line before, and then do pre, post, weekly, daily, and then, so still working on that. But then I have a limit entry breakdown, stop loss breakdown, and limit exit breakdown. And I like to write stories for these. I like to make them as interesting and readable as possible, as if I'm writing a nonfiction story. Something like that. That makes it interesting for me. Major keys, things that I really just should always remember for this trade. So I like to have just about 4 keys and keep them all anywhere from 1 sentence to a paragraph long. So that would be like 3, 4, 5 sentences. And then these are optional, but it's always nice to fill these. So things I enjoyed, things I liked, things I can improve upon, things I can take away from this, and habits I need to euthanize. So that is it. Here's the trade on TradeZella. So here are the arrows if you want to study these or look at these or whatever you want to do. Entered here, goes down to the fair value gap, runs this high, which is not enough for me to take a partial. I mean, makes no sense to enter here and then take a partial on that same thing. So runs up one more time. If we had went above this high, because there was a new day opening gap here and expanded higher, because there was these premium arrays here, I would have, if I was watching the trade the entire time, I would have scaled above here, but it's hard to say because anything could have influenced me not scaling above that. So, which tells me that, you know, I'm just being honest with myself, and tells me that I don't really have a definite down to the pip, down to the molecule plan, but at the same time, I'm still building it. And so what would have constituted of taking partials above this high is the fact that we were expanding after consolidation, and we're beginning to trade above that new week opening gap. So I would have wanted it to trade above it and then come down, and then treat that new day opening gap as support. So if you didn't take a partial here, surely what I would have done was move my stop from, what was it, sorry, 59.1150 to this low, where the idea would have been negated, and that would have only saved me about 2 handles, nothing more, maybe 3. So, you know, nothing really to trip over, right? If you have a rock in your shoe, you don't fall every single step. It just bothers you a little, and that's what it is. So, you know, I don't feel anything towards any sort of regret, any sort of angriness, anything. It's just kind of like I'm curious, and there's a little uncertainty going into the week, going into the remainder of the week and next week and all. So uncertainty is something you have to embrace, and that's what I'm going to be sort of working on, is that, you know, despite me seeing my weekly target achieved, I still think there's some movement left for the week, considering we have high impact news, but that's more of a thing you have to assess when you know, are live in the markets and looking at price. Right now we're looking at this trade, so I'm not going to be talking about what I'm looking going forward into the week until I do. So yeah, I hope you enjoyed this. I hope it was helpful. Here are the executions provided by TradeZella. Cool. So peace out.